it is $6,500. According to you, in your bank should be $6,500, but bank shows that we have $5,900. So is this a fraud? No, because service charges, you don't know. We didn't include service charges here. We don't know that. We write it down the checks and customers give us a check and we present it to the bank. It is 3 days to clear. So our bank account is not increased. Plus there can be customers who paid us, but we don't know, like we gave authority to the bank who collect on our behalf, and we will be notified through bank statement. So it means those customers that deposit the money over there, but we don't know, it can be the difference. Insurance as well, we transfer our authority to the bank, pay the insurance on our behalf. We don't know, but we will be notified when we receive the bank statement. So it is quite normal that bank balance is not equal to your cash balance. So is this a fraud? Not necessarily. Can be, it cannot be. So we make a bank reconciliation statement. So bank reconciliation statement is basically we are
adjusting.
Of course. So it's the difference between companies' cash records and bank balance. If they tally after adjustment, it means there is no fraud. If they didn't tally, it means there is some human error or fraud. Human error is unintentional increase or decrease of these kind of balances. And if it is intentional, it is fraud. So it means there are two records of a business cash. Normally, we record the cash, like I just explained, and there is a bank statement. So there is a difference between these two because of timing lag or lag timing, right? So our bank side, what it has, the information, deposits in transit, outstanding checks, banking errors. Errors can also happen through banks. Bank can also make an error because systems cannot make that. 2 plus 2 always equals to 4, but it's a human error if 2 plus 2 is equal to 5. So bank side, lacking the deposit in transit. Our customer give us check and we deposit our check to the bank. In our books, our cash is increased, but in bank side it's not increased. So it means there is a difference on the bank side as well. So banks didn't add our deposit. Outstanding check, which means we write it down checks for payment, like payment of salaries, payment of to the suppliers. But suppliers or employees, they didn't present the checks, so our bank balance is not decreased, right? Or they deposit the check, it takes 3 days to clear. So 3 days our bank balance is the same. It's not decreased. According to our books, it should be decreased, but it's not decreased. There can be an error. But on the book side, bank collections, our cash is not equal to the bank cash. Why? Because we authorize bank to collect cash on our behalf. We don't know how many customers or how much amount the bank has received. So our books don't have. Electronically funds transfer. You enter to your account and you click enter, you transfer the funds. So that is immediately deducted by banks, but you didn't record it here. We call this electronically funds transfer because this is the authorized by the manager, and the bookkeeper is sitting on the next department and he don't know, but managers who are using day-to-day routines, so they know, they have the authority, so they log on to the bank and they transfer the money, and you don't know. You know when bank statement comes. Bank statement comes after a certain period of time, 15 days or after 1 month. Service charges, you don't know. Interest revenue, if you have outstanding balance, you receive some interest amount, you as a revenue, as a income, you don't know. That must be added to your cash balance. You don't know. So it's not written over there. It can be the difference. Non-sufficient fund checks. You receive the customer bank checks, but that is bounced. right? Can happen. You were expecting that your bank account should increase, but it's not increased. Instead, bank notified you that you deposit a bogus check or a non-sufficient or bounce check. In some countries, we call this bounce. That it is checks, but the amount is not in that. The according amount is not that in your in customer's account. Cost of printing the check, of course, it also included uh, the charges by the banks, and also human error, book error. You mistakenly wrote it down with some wrong numbers, right? So it means if we include all these to our book side, that we that is missing our side, we write it down on the book side, and if we wrote it down on the bank side, that is that should be written on the bank side. It means if their balance equals to cash book balance, it means there is no fraud. It means only it's a normal process. Due to time lagging, the difference is not equal. So bank reconciliation statement is made to see that our cash book balance is equal to our bank side balance after accounting for adjustments, right? Here we go. So we have an example here, and that is December 31st, bank balance of Mid-Atlantic manufacturer is 5,900. Like I also showed you its bank statement as well. Bank statement shows $5,900 we have. The company cash account is 3340 according to company. In our bank account, it should be $3,340, but the bank account is showing 5,900. So when you receive the statement, you find out that there is a deposit in transit 1,600. It means we increase our cash, but it takes time for us banks to process and increase the balance, right? Banking error was that the bank detected $100 for a check written by another company. So how you are going to rectify this one? So bank balance should be added back to 100 because their mistake, they wrongly deduct the 100, so you add back. Okay. Outstanding checks total 1340, which means you write it down $1,340 number of checks. So in your books, you deduct the cash. But to whom you write it down the check, they didn't cash it out yet. It means in your bank account, it should be decreased. Electronically funds transfer received of your dividend. Revenue earned on investment 900. So bank received on your behalf 900. So bank included in this one in 5,900, but in this it is not written. So you add here on book side. Okay. Bank collection of your account receivable. Bank collected on your behalf. It's already added here, right? Already added here, but it's not added here, so you add back here, right? Book error. So check number was 333. For you write it down 510, but the amount you actually paid on account was 150, right? It means you wrote it down the check of $150, right? But you recorded on your books as 510, right? So you mistakenly record $150 check as 510. So it means 360, which is the difference here, should be added back to book side, right? Because Bank will pay you what is written on the check, and on the written on the bank, it actually paid was $150. So bank paid $150. Customer is happy because it's $150, but you record 510. It's human error, right? So you decrease that error. Bank charges, on bank side it is deducted here, but here it is deducted, but here it needs to be deducted. So you deduct it on the book side. Non-sufficient fund. When you receive the check, you increase your cash, but bank tell you that this check is NSF, non-sufficient fund, bounced. So you deduct it, right? EFT payments, electronically funds transfer payment, 400. Bank transfer on your behalf. You are notified. It means bank, this 5,900 already had this, but our book balance, they don't have it. So we deduct from our book side. So how we are going to make that one? Very simple. So two methods, one is report format and one is account format, whichever suits you, whichever you like, you do that. So this is a report format. So you write it down first, cash balance. Cash balance as bank statement, or you can just write it down bank balance. Or cash balance per book, or your book balance. You can also write it down book balance here. So cash balance, we have 5,900, right? So what is missing on the bank side? Like here, we talked about on book side, what is missing? Deposit in transit, outstanding checks, and bank error. So you deposit in transit 1,600, like we talk about over there, and correction of errors, plus less outstanding check. Answer would be 6260, right? Okay. Now, what is missing to our books? Charges, human error, electronically funds, receipt, and payments, right? So book balance is 3340. Electronically fund transfer as receipt 900, as receivables 2100, 30 revenue they receive. So you add all the revenues that bank receive on our behalf, then the correction, right? Because you made a mistake. Less service charges and less all the payments, the NSF, which is non-sufficient fund. In our books, we increase that one. Why? Because we receive the check, we increase our cash, but that is bounced, so we decrease that one.